Well, good morning, everyone. If you're from Australia or if you're someone like some of my panelists and myself in the US, good evening to you. Thank you for joining us. We have the wonderful privilege to be able to be the first panel of this APAC Mines and Mining Conference. And we were given the possibility to discuss specifically on issues of mergers, acquisitions, joint ventures, and cross-border deal in the mining industry, trying to understand what impact COVID-19 has had on the activity in financial activity around acquisition and joint ventures, and try to see what will happen post-crisis, if anything would have changed in terms of how companies engage with potential acquisition and carry their due diligence on the ground. So joining me, my name is Remi Piet. I'm Senior Director at America's Market Intelligence and African Market Intelligence. We have a network of 350 experts in Africa and the Americas to be able to carry intelligence, informations, and due diligence for companies. But I'm joined more importantly by three amazing panelists. Warren Gilman will be the first one to talk. He's the Chief Executive Officer from Queens Road Central Capital. I also have with me Siri Genik, Principal and Founder of Bridge, also Vice Chair of Women in Mining Canada. And finally, Amelia Polisano joins us from Hong Kong. She's a foreign registered lawyer from the Harvey Law Group. And with all of these panelists, I will have the pleasure to try to understand the impact of COVID-19 on joint ventures and how companies and investors should actually adapt to the new realities. I'd like to take maybe just the first 2 or 3 minutes just to reflect on what we've seen over the last few weeks and months. Obviously, the pandemics have had a strong impact on the mining sector, not as bad as we might have feared. There's been some loss of production, obviously, but most companies are now starting to confirm that they'll be able to ramp up to at least close to their objective for 2020. And we've seen, however, some very strong activity despite the incapacity of many mining professionals to go on ground and continue their due diligence. A lot of activity in the joint venture and merger acquisition scene just over the last few days. We've seen Shandong taking over Cardinal Resources, Xinjiang Mining and Silvercorp fighting over Guyana Goldfield in the Guyana. So it's very interesting to see this activity continuing across this industry and try to understand what is pushing this continuance of joint ventures and acquisition, obviously mineral prices, but also how companies should be very careful about being able to assess correctly above the ground risks before acquisition. So maybe on looking at this, I'd like to turn to Warren first. We're very rude. We start men and not give the opportunity to our friends co-panelists to talk first. But Warren, my perception here is I'd like to ask you what you've seen over the last few days and weeks and months over the impact of COVID-19 on mining investments and also on the financial market, and how has that impacted your own choices of investments?
Thank you, Remi, for that introduction and for the question, and welcome all participants to the conference. Remi, I think we're all really surprised at the impact of the pandemic on the mining industry and on the capital markets. You mentioned how active the M&A market has been over the course of the last 2 months, and I think it's somewhat shocking to see the level of activity of M&A. Granted, it has been focused largely on the precious metal sector, given the run-up in the gold price. And so people are getting very optimistic about the sector. And obviously, there's a lot of acquisition capital available. So that eases or lubricates the wheels, if you will. But it isn't just limited to precious metals. You saw one in Oz overnight with
Yes.
Oz Minerals actually acquiring Cassini in the base metal side of things. So level of activity is I wouldn't say unprecedented, but very active and very surprising given the situation that we find ourselves in with respect to the pandemic. I'll come back to that point later, but the other significant point to raise is that the impact of the pandemic on equity markets generally and the resource markets. Now, we all realize that we're in one raging bull market, which again is counterintuitive to where we might expect to find ourselves in the pandemic. that has found its way down largely into the mining sector as well. Again, led by the precious metals subsector, but also pretty much across the board to varying degrees. And again, this is somewhat surprising. Going back to M&A, the shocking thing about M&A, and I know some of my co-panelists here will have a number of inputs on this topic, but to me, it's quite surprising. One of the most important aspects of M&A is obviously doing your due diligence. In my case, due diligence ultimately translates into putting boots on the ground, visiting the property, and making sure you've reduced every imaginable risk in the acquisition of this asset or this company. Obviously, in the current environment, that is an impossibility. You can't do physical due diligence. So making an acquisition in this type of environment is more risky than it usually is. On top of that, there's been a significant increase in hostile takeovers. So maybe one reinforces the other in that hostile takeovers are usually rare. They're usually unsuccessful. And one of the reasons why they're rare is people don't like to put significant capital at risk when you can't do due diligence. And in a hostile situation, obviously, you can't do due diligence. But in the situation where we currently find ourselves, even a friendly deal, you can't do due diligence. So you may as well be hostile as friendly. You're not really gaining any additional access in terms of physical presence at the property. So really interesting. Final point, you asked me, how is this impacting our investment philosophy at Queens Road Capital? Well, it's times like these, and to use the colloquial term, the ducks are quacking. There's a huge amount of equity issuance going on. Sometimes 6, 7, 8 equity issues, equity raisings every single day. Again, perhaps not unprecedented, but highly, highly active, very unusual. When capital markets are this active and public markets are this open, private capital tends to stand down. We generally can't compete with public markets in terms of cost of capital. And we look at these periods really as time to sell rather than times to buy. So that's very much what we're doing at Queens Road right now. We're standing back, watching with interest, selling positions that we already have, looking for opportunities to enter in the future when inevitably we'll have a downturn that perhaps will better reflect the current situation from a pandemic perspective. So yeah, I'll leave it there, Remi.
Thank you very much, Warren. I'd like to just follow up maybe with a question that serves as a transition maybe to Siri down the road, because I know Siri is going to talk to us about ESG and different considerations. What is, according to you, we've discussed this on our conversation up to this, the preparation for this panel, the main consideration that companies should have, investors should have when they're assessing a project? And I know that we're in a very specific situation today because of COVID, but maybe these actually would have helped us develop new ways of doing counterparty risk assessment, of using technology, or of engaging differently with different actors for the due diligence processes in the coming month. And more generally, what are the most important considerations according to you and errors that investors do when they don't carry out their due diligence correctly?
Well, by far and away, Remi, the most important thing is in the mining industry, it all comes down to the ore body. The ore body is the most important thing. Obviously, there are other considerations. There's the geopolitical risk. There's the permitting situation. There's the place in the cost curve. There's the point in the evolutionary cycle of the project itself, and the point in the commodity cycle. But at the end of the day, if you've got a fabulous ore body, it trumps all of those other considerations. So the most important consideration in M&A, and frankly in equity investment, is the quality of the ore body. And again, the most important way to assess the quality of the ore body is to actually go and see it and touch it.
Perfect. Thank you, Warren. I'll turn maybe to Siri. Siri, I know you've done a lot of work on cross-border M&As and joint venture and acquisition. I'd like to get your perspective on the recent news on the market and the evolution of these acquisition and movements from investors. Can you maybe just provide us with their expertise and experience? And you're on mute right now. If it's okay, Siri.
I thought I'd try it and see if I didn't have to say anything. Thank you. So everybody has seen the news in the last 2 months, whether it's across South America, across Africa, China. There are movements everywhere, transactions everywhere. I would suggest 2/3 of them have probably started way before COVID, so probably mid of last year. But I think also there have been some opportunities that have come up with the transaction and caused by COVID-19. So COVID is a disruptor. And while I would normally totally agree with Warren about boots on the ground and touching and seeing, and I'm the first one to have a plane ticket to the most exotic locations in the world, that came to a halt, I guess, right after PDAC. For us anyway, from Toronto. And so we're watching, if I watch the movements, if I look at now, what I'm seeing is I'm seeing transactions that are consolidating for the most part, except for maybe SSR and Alistair, which I'm probably still trying to figure out. Maybe others are also. I'm seeing companies making sure that there is there's asset in the pipeline. You're looking at neighbors. If I'm looking at Canada, First Mining just merged with another company right next door to it in Northern Ontario, and they're merging supply chains. There's merging infrastructure. So economies of scale, they make sense. You're seeing a lot of movement in Africa and China, of course, which are, I would suggest, almost obvious. But then again, we've just seen in Canada, in an area I'm familiar with in Baffinland, Shandong by TMAC Resources, which is Hope Bay and gold. So we're seeing that. We're seeing, besides gold, as Warren mentioned, we're seeing nickel. So we're going to talk a little bit more about critical minerals now with COVID. COVID is sort of shifting the equation away from the traditional, and gold is the obvious one, and I'm sure it'll continue for a little while. Everybody's hoping that we'll see that $2,000 mark. But what COVID has done has made us realize there's sort of what I call a triple whammy. There's COVID followed by a recession, and it's followed by climate change. And so none of those will go away. COVID-19 will hopefully go away with a vaccine at some point, but it'll bring a recession, which will take all of us a good time to get over, aligned with climate change. So in that space, gold is important, but it's not critical and it's not strategic. And that is where we're seeing a lot of movement. So nickel, for example, and you're seeing people in Africa, in Southeast Asia, looking at assets that they thought were no good and rethinking, well, maybe if we move this over here, or if we don't use a smelter and we look at a different use of nickel for, I mean, EVs is the obvious one, but long-term batteries uses nickel. Scandium, niobium. So you're seeing a lot of movement in that space. So to go to what's next, what COVID-19 has brought forward is a lot of disruption in supply chains, both upstream and downstream. So if you're counting on that cobalt and you're not in Canada, where there's a fair amount of it, and the DRC is not on your radar list because of concerns around ESG, you've now got a challenge. Nickel is the same thing. So you're seeing interesting ways of doing transactions, like mining stockpiles. So if you're looking at critical minerals, strategic minerals, you can actually mine stockpiles, stockpiles, for example. So coal is on the way out, but the stockpiles are there. They can be mined for critical minerals around the world. So you've got a double phenomenon. You've got China's Belt and Road Initiative that has not gone away. And at the very same time, you've got trade wars which has reshifted and created a lot of in situ or non-Asian transactions. And so that chessboard has become a little bit different from what Warren was talking about, and it's new to all of us. And when you throw ESG in, when you're looking at investors today, while they're all, of course, looking to make money, as we all are, for our stakeholders, whether they're the shareholders that are important, of course, the communities, the concerns around the impacts of these transactions is major. So whether it's geopolitical, whether it is climate driven, COVID, for example, has brought forward huge concerns with talent. So the supply chain of people itself, you may not be able, and that'll go to Amelia, of course, but all of a sudden people, I mean, all of us probably around the screen have traveled intensively all their lives, and all of a sudden I've been in the same house for the last 4 months, which for me is, I'll never complain about jet lag again or traveling, but it does. So what COVID is also doing to our transactions is the long term. So I think we're seeing the end of what had started before COVID. COVID has sort of stopped us dead in our tracks and say, okay, what's next? So we're going to, I believe, move away from the short-term, right away, instant gratification model of transactions to a more long-term situation. We're going to look at supply chains. We're going to look at acquisitions that are vertical. So the obvious one everybody knows about, of course, is Tesla, SpaceX, but also they've just made it, Tesla and Elon Musk has just had a major relationship agreed to with Glencore. So you're seeing these major players now wanting to make sure that they've got what they need to get to that next step. So like I said, Tesla's the easy one. Our whole economy is shifting energy-wise, and that energy shift that ties into renewable energy and the whole climate change is where I believe our whole market is going to go. So gold will still be there as the I guess the standard perhaps, but everything's really changing. And we're going to be looking at Africa a lot. I've certainly spent a lot of time doing due diligences without, unfortunately, being on the ground. And I think that's the other place we're going to see change, and I'm excited about it, is the acceleration of the incorporation of new technologies. So doing due diligences and looking at the quality of that asset, but with a whole different set of tools. So in remote areas that most humans won't be able to go to, and I don't mean under the ocean, but I mean the Arctic, the Antarctica. There are places that before you can even get to without COVID, it may be physically impossible. So that touching and feeling that we all look for may disappear, but I believe technology, and we're there, and it'll be accelerated by COVID.
Perfect.
So,
thank you.
Yeah.
Siri, I'm just building on your answer. Thank you very much for the insight. I mean, I do agree with what you were saying. We're going to turn to Amelia very quickly on issues of more, let's say, implementation of problems linked to immigrations, issues of crossing borders as of today, logistics issues. But before that, I just wanted maybe to rebound on what you were mentioning, the changes of behavior in terms of due diligence and what needs to be done to understand assets. We've been working with several mining majors around the years and key investors, and we've seen errors that were made by just engaging in an asset without doing the proper due diligence, understanding the capacity to acquire a social license to operate, having projects that have been delayed for several years because of the incapacity to integrate ESG concepts. This together with the importance you mentioned, thank you very much, the issue of supply chain. There's a big push towards the sustainability of and quality of supply chains with demands of standards from the consumer that will definitely change the position and the need for better understanding of social impact, of environmental impact, of political risk, much more at the regional and local level, which is, I mean, where we have our network, which is implemented there, but for investors and companies to understand the risk that they will see, because we're seeing a series of different acquisitions. Indeed, I mean, on the Guyana Goldfield, we help one of the company understand the assets itself, but others, we're pretty sure that companies have not done the needed work in terms of ESG and understanding the socioeconomic risks around the assets itself, and that might actually delay the implementation of the production of it for several years. And I'd like to turn, thank you, Siri, I'd like to turn to Amelia maybe now to take it from the perspective of managerial capacities with the existing restrictions for travel. And I had 49 consecutive weeks of travel that was ended after PDAC, and I think that was the same for most of people that are listening to the to this chat. But there still needs some work that needs to be done. Essential services. There's a presence of foreign workers and maybe management employees that are still have to be next to their assets or train some local workforce. You've been working on this, Amelia, on the immigration and logistics aspects of working into cross-border deals, and what has been the change from the arrival of COVID-19 on how companies now reach out to you to see how they can actually implement the right human resources and immigration procedures.
Thank you. Yes, what we found is recently people are reassessing their situation. Obviously, being in Hong Kong, we've been dealing with COVID and the interruptions with the protests and things in Hong Kong since January. So we've been disrupted with all of the clients that are here and across the border. We've already had implementations in place dealing with this. So we were in a bit more in a better position as such with our clients insofar as they were already forward thinking. And obviously the rest of the world catching up with COVID, thinking it was like an isolated issue over here, which then trickled out later on. And so then people were reassessing what was going on. And we have seen lots of clients look at different and protection for their employees. I just quickly want to touch on the due diligence points. Obviously, as lawyers, we're very hot on due diligence. So when advising clients, we're very much of, you need to do all of your research. You need to go and see what's going on. You need to see and, the tangible aspects, which as COVID has stopped that, and even with the restrictions of travel, has stopped that sort of thing going ahead. So then companies are having to, based on paper or anything they can find on the public record or articles, that's how people have been having to deal with due diligence, which obviously has an impact on then the agreements and mergers and acquisitions and joint ventures and anything like that, because they're looking to protect themselves as a corporation. They're looking to say, well, actually, if something goes terribly wrong between one point to the other, how can we get out of this? We don't want to go on and finalize a deal when we're actually we're acquiring an asset that it's not going to be useful in the long term for us. So we've had a lot of movement and actually lots of discussions in even our documentation that we've been preparing, in that we have to protect our clients in these eventualities that may occur. So it's been a challenge, but we've a lot of companies, they're not thinking short term. As Siri was saying, it's not a short term goal anymore. They have to think of the long term process, which then also leads to what companies are looking to merge or joint ventures with each other, because it may actually be not even political alliances, but more of convenience, because they need an entity somewhere else in order to facilitate with, say, the due diligence. So it might be a merge of compatibility rather than a necessity, in that sort of way. But what we found with obviously restrictions, as you're saying, no one's been traveling. Everyone's getting a little bit claustrophobic in their houses. And obviously with lockdown with a lot of the countries, obviously in Hong Kong, we're quite free to go around. Obviously there's been restrictions. But obviously there's issues with restrictions and foreigners being in different countries. I'm an expat in Hong Kong. The UK government encouraged everyone to come back. Anywhere. We had clients and we have colleagues who are in different countries, so in Jakarta or in Thailand, and they were told to go back home from their own consulates. But we have to think of also a business situation. Everyone needs to look at it. And as a result, what companies are looking at is we're stuck because either expats are going back home, which a lot of people did in Hong Kong. They decided when everything happened, they were going. And as a result, some companies, obviously mining industries and things, came to a halt because they were stuck. What do? They have to shut down operations and then they can't travel. So what we're finding with clients is they're looking at options. They're looking at permanent residency. They're looking at citizenship for different jurisdictions, enabled to facilitate their business relations so they can move freely and have that global mobility in order to facilitate their business structure. They're looking for their employees. They're looking for themselves. There are some key workers who have been able to avoid, the movement and quarantine. So in Hong Kong, as you arrive in Hong Kong, you go into quarantine for 2 weeks. And we've had this for a long time. For the last 3 months, everyone has to do this, regardless if you are. However, there are some exceptions, so there are key workers that are identified, which are available to sort that out. But companies are now thinking, actually, we don't want this to happen again. So as such, they're now preparing, actually, it's worth it for them to consider the different, citizenships of their employees and things like that in order to be able to cross borders and give that option and be able to assist moving forward.
Perfect, and thank you very much, Amelia, for your answer. I might just want to turn back to the different panel members, starting with Warren. Just 1 minute each, if you want to add something on the current situation of the scene of merger acquisitions and joint ventures in the mining sector. What would you advise to companies and investors today?
Well, Remi, I think I probably gave a little bit of hint of that earlier, and that I would advise caution. What we have right now is a classic bubble market that's driven by incredibly low interest rates. And it's not reflective of the current level of economic activity. It's certainly not reflective of global GDP. Gold might be an exception, but base metals and energy are currently not reflecting supply and demand in the short to medium term. So I would certainly advise caution.
Thank you very much for this view indeed. And Siri, maybe if I can turn to you, a final comment maybe on the current ongoing wave of joint ventures and advice that you would give to some of the investors and companies that you advise.
So I certainly agree with Warren, caution, but I mean, business, you have to be cautious, you have to be careful. That being said, I'll take the opposite. I think this is an incredible opportunity, incredible time. We've never seen anything like this. I mean, I know mining is cyclical, but this just beats everything. So I think, go for the ride, look at the opportunities, use that technology, use the innovation, use different ways, go for the vertical integration. As Amelia points out, there are different ways of getting great talent, different ways of addressing supply chains. Mining needed a good change. I think it needed a bit of a kick in the butt. This is it. Let's do it. Let's make it better. Let's
Perfect.
make it green. But yeah, thanks.
Amelia, maybe just one final word. I just have 1 minute to close after, please.
Yeah, no, it's just more of an opportunity. I think it's not taking it as a down thing. It's an opening up doors for everybody to have new alliances, new visions, and short term, it's more long term game.
So to conclude this panel, I'll try to get the middle road here. I understand, obviously, the cautious road that Warren advocates for. I would encourage you, if you're listening, to just reach out to Siri, Amelia, Warren, or myself if you need expertise on the kind of immigration policies that you need. Warren on position from investment or counterparty risk assessment with our assets on the ground and workers in the 50 countries that we operate in. We're here to help. And I just want to thank all of you and wish you, to the viewers, the rest of an event with plenty of interesting conversations. Thank you.
Thank you. Good evening.